Hey guys, welcome back to the Avoiding Broke podcast with me, Jamain. And look, first thing I want to say is happy Mother's Day to all the mothers, prospective mothers out there. Guys, what a wonderful day to actually be able to celebrate life, celebrate family, community, and celebrate the incredible act of bringing a child into the world. So happy Mother's Day to all the mothers out there. So guys, what a week it's been, right? Really interesting for us here in the UK, particularly. We had some budget news flowing through recently, and it's something that I've not had a full chance to come onto the podcast and actually do a bit of a reflection on. And I guess it's probably a pretty good time to do that today. Not go into too much detail about what's been said because you can find the summaries out there on the internet, but more just to have a look at what does that mean for real people. And as you know, guys, whatever we say here on Avoiding Broke, we think quite a lot about what it means for Europeans, what it means for our friends in America, but the lessons we take can be applied anywhere. So even if the detail is specific, the concepts will be universal. So just think about that as we go along. So, look, in the UK, guys, I would generally say that our budget has been net underwhelming, right? I mean, if we actually step back and just say, what does it really mean for those of us who have got, let's say, employment? What has really happened? Well, for anybody who's employed and either working from home or going in, not a lot has necessarily changed about your jobs. Albeit some businesses are hopefully going to be reopening soon, and we're seeing that happening all across the world, where you're kind of getting the easing on social distancing and you're seeing some businesses start to open up. So that's obviously really positive. But in terms of what it means for your job and any benefits that you might be able to take, there's not really been anything. In the States, we know that they've just had the stimulus check, and for our American friends, hopefully you're being smart about how you invest that money. But for anybody in the UK, there's not a huge amount. I think it's more if you see people on furlough, that's where it starts to get really interesting. And guys, my take on a lot of this. Furlough I see this as almost like another way of just stopping businesses from failing because, and our economies, they can't absorb mass unemployment. So furlough is like sticking a plaster over a cut and stopping any mass bleeding. And I think this is something that we all need to be really smart about. So we know that governments are basically supporting economies. In the States, you've got stimulus checks. In the UK, for example, we've got furlough schemes. Now, ideally, what the governments want to do is run these things through to the end of the year or near the end of the year. And they're hoping that they can reopen economies leading up to ending those schemes. And so they can stop mass unemployment happening. Guys, I just don't know how that's going to work because, in order for economies to really operate efficiently, you have to allow a certain number of businesses to fail. That's like core economic theory. So it's really difficult for governments to continuously top businesses up. In theory, they need to allow some people to fail. Who will fail? How many? How severe? We don't know. So for anybody who's there either relying upon a stimulus check or claiming furlough, now's the time, guys, to go back to basics and to really reevaluate all of your expenses. Evaluate everything because I think if you're relying on a government handout, it's an unfortunate position to be in, but the most important thing is to really look and think, how can you start generating additional flows, additional cash flows, additional means of income that reduce your reliance on that handout. It's really important because the handout, we don't know when it's going to stop and we don't know what's going to happen when it stops. The other really interesting thing that I saw coming through was what things really mean for savers and investors. So the budget was really fascinating because it looks like we're going to have more people paying higher rates of tax. Even though they'll say they haven't deliberately changed the tax bandings, there are some funky rules that may mean that more people are going to pay higher rates of tax. Okay, fine. But there's also, I think, lesser upside for anybody who's a saver or an investor. So you kind of get stung with a bit of a double whammy. So if you're sitting there as a taxpayer, on the one hand, it's possible you're going to be paying slightly more in tax. On the other hand, you're also going to be earning slightly less in your savings. Less in savings, why? Because interest rates have been dropping. And we also know that because of inflation, inflation erodes the value of money over time. Because if you've got the same amount of money stuck in a bank, but the cost of goods goes up, your money is worth less over time. Really tough position to be in, guys. And this is where I think anybody who is there looking to grind and hustle their way through to a better future, now's when we want to be starting to think a little bit smarter, a little bit differently. So maybe it's worth me just sharing a few things that we've been doing, and I'll try and give you a little bit of a sense why. So the first thing is we've decided how much we might want to have in, say, gold and silver, and kind of put a bit of a stopper on it. So we've got an amount in mind. We've got it there. We've put a stopper on it. That's the end of it, because unfortunately the value of the assets have been decreasing. They still remain, I think, a more reliable store of value, but the values have, for whatever reason, been going down, and so we don't want to over-index on these assets that aren't really giving returns. For a lot of people, property might still be an option. Property remains really fascinating. So in the UK, you'd have seen the extension to stamp duty. So basically, properties up to 500k, you're going to get a bit of relief up to the end of June, I think it is, and then properties up to 250k. The relief is going to continue through to September. So jumping in property, either as an investor or actually to buy your first residential property, now's not a bad time to do it. What we've actually chosen to do is overpay on our mortgage. So I recently made an overpayment on the mortgage. I think that's going to be a really smart kind of move, because the value of our home over time should hopefully remain at least stable and hopefully increase. But by overpaying on the mortgage, I'm going to just be reducing those payments that I've got to make down. And a big part of our freedom plan, and I call it a freedom plan because that's when we should be financially free, is that the home that we live in as a minimum should be mortgage free. So we should own that outright. And so that I just think an overpayment on the mortgage could be a really attractive move, because you're going to save a few percent, and you're certainly going to be, the saving you're going to make is going to be greater than money you're going to earn if you have it in the equivalent savings account. So just think about that. The other thing that's really interesting right now is equity markets. Equity markets is a bit crazy at the minute, because if you've been following the financial industry, you're going to see that bond yields have been increasing these past few weeks. And it creates a really interesting situation where we could see, you could see a bit of a spike in equity markets, just as likely as you could see nothing. But what we're doing in equity markets is actually to look and say, again, have our position for what we want to ultimately, what we know we want to invest in as it stands. We've got a position taken, and I think we're just going to be gradually adding money to the pot. I still have got very low expectation for what's going to happen in equity markets, but I just think compounding is such a powerful force, and there is so much government propping up of the economy. It's possible that equity investments could still have some positive yield. So we're gonna keep our position. But the really big thing for us, guys, is cryptocurrency. Crypto is something that you see that we've been speaking about on the channel for a while. It's a space where we've genuinely been increasing our exposure. I've been talking about how we've been going irresponsibly long, and how this is a Raoul Pal quote, and I've really been trying to bump up the amount of money that we have in cryptocurrency. And fascinatingly, we're starting to see the mass adoption of crypto. So you're starting to see businesses pull it onto the balance sheet. You saw that Bitcoin had dipped a few weeks ago. We think it was linked to a big sell-off by one of the massive miners. But what's happened? Well, it's rebounded super aggressively this weekend, and it's now exceeded its previous all-time high. So guys, the crypto bull market continues. It's still an incredible source of positive yield. I don't even understand how it's happening like this. And the adoption is growing. But what's really fascinating is that you're seeing companies, large companies, Tesla, MicroStrategy, Square, you're seeing these guys bring Bitcoin onto their balance sheet. That means they are giving it as much credibility as US dollars. You're seeing that happen, and it is still open for all of us normal people, which is insane. Because a lot of these things, they happen behind closed doors. Us normal people are the last to find out. We never get the full value. That's all changing, guys, and that's where we're going really bullish. Look, crypto is something that I should probably spend a little bit more time on, helping to explain a little bit more about what it is, how to invest, what some options are. And if that's valuable, let me know in the comments and we can just do a quick video to explain how we invest, the exchanges we use, why we make certain decisions, just to share a bit more of our learning. So if that's valuable, let us know and we'll definitely do that. But guys, I think the summary of what I've been saying here is that for us normal people who are sitting here watching this whole COVID time play out, I think there's been a lot of government intervention to probably keep the lives around us fairly stable. But we are going to have to fight really hard to find more and more value and benefit for ourselves. It is there though. That's the interesting thing. It is going to be there. Will it come in traditional banking? I'm not convinced it will. Will it come in investments of some sort? I really think so. But what investment? That's the key. Traditional savings products, they're going to give something. What that is, I'm not too sure. Commodities like gold and silver, I'm really not too sure. Are we going to see something special happening in the equity markets? I think there's a greater chance of that. I think bond markets are looking really suspect, particularly with rising bond yields. I'm really not too sure what's going on there. But cryptocurrency is looking like a phenomenal space where we're seeing real returns happen and where we're seeing crypto moving into the mainstream. And so this is the bet that we're making, guys. We are putting our backing behind the cryptocurrency space because we think if we can get in at an early enough point, there is a lot of upside that we can take. Of course, you are taking risk, and so we're only risking what we can afford to lose. But crucially, we think the risk-reward ratio is sufficiently good that it's a risk worth taking. So guys, look, that's how we're feeling right now, post-budget, post-stimulus, and this is how we're feeling about the macroeconomy right now. As ever, if you've got any comments, questions, feedback, queries, you know where we are. We're on all mediums at Avoiding Broke. If you're watching this on YouTube, you can drop a comment in the comment section and smash the like button. If you're on Facebook, give us a thumbs up so we know you're enjoying things and leave a comment. And if you're on the podcast, we're so grateful for you staying with us. We're loving being here and hopefully you're still getting great value from what we're doing. We'll hit you up soon, guys. If you want any views on anything in the interim, just drop us a note and I need to try and get making some more videos as we go through. It's actually been a really busy last few weeks and few months for us. We're still trying to get a few different projects complete. We're doing a lot on property. We do a lot in terms of trying to write books. So there are a few different projects. We're getting hyper stretched, which is really fun. But we're definitely going to keep trying to make sure we get the freshest and most up-to-date content out to you guys in the best way we can. All right, until next week, guys, look after yourself and look forward to having me and/or Leanne with you next week. And we're going to be sharing some more gems from Avoiding Broke. Have a good week, guys. Talk to you soon. Cheers. Bye.